Subscribe to H&R Block India by clicking the red button below.
There is an exciting news that caught a lot of attention starting January 2019. It's about child tax credit getting bigger, which means lesser taxes to be paid going forward. This video will explain you about child tax credit, how to claim the credit, tax refund on it, and much more. So let's get started. First, let's understand what is child tax credit. If you, as a taxpayer, have a dependent child below the age of 17 years, you might be eligible for a credit at the end of the year which will help you minimize your tax liability. Has tax bracket got anything to do with child tax credit? Well, yes. The tax rate differs based on your status, being a single taxpayer or married filing joint tax return status. Let's learn the 6 eligibility tests to avail the child tax credit. First is age test. The child should be below the age of 17 years as on the last day of tax year that you are filing the return for. Second is relationship test. The child should be your own child, a foster child or a stepchild. The test is also valid if the child is related to you in any way such as sibling, grandchild, niece, etc. Third is support test. You, the claimant, should have provided more than 50% of financial support to the child during tax year under consideration. Fourth is dependent test. The child should be a full-time student for a period of at least 5 months for the tax year and must be claimed as a dependent on the federal tax return. Fifth is the citizen test. The child must be a US resident or a US national or a resident alien of US and must be having a valid social security number. And the sixth is the resident test. The child must have lived with you for at least more than half of the tax year. However, there are exceptions to this rule. A child born in the tax year is regarded to be living with claimant for the entire year. A temporary absence due to special occasions such as vacation is regarded as the period lived with the claimants. There are other exceptions for the child if claimants are divorced or separated. Let's also talk about the phase-out limits. If the modified adjusted gross income is higher than a certain limit, then the child tax credit begins to phase out. This depends on the tax filing status of the claimant. For the year 2018, the phase out begins at $200,000 AGI for single, head of household or married filing separately. However, for married filing jointly, it is $400,000. We also have a detailed guide on this, the link for which is given in the description below. Speaking of deductions, it is obvious that you would want to know about the refund. A refund of $1,400 out of $2,000 per child tax credit will be provided for the families in US whose child tax credit is more than the tax liability. New credit for other dependents. If you have a dependent, you may be able to claim the credit for other dependents. The ODC is a non-refundable credit of up to $500 for each eligible dependent who cannot be claimed for the child tax credit. The ODC and CTC are both figured using the child tax credit and credit for other dependents worksheet and reported on form 1040 line 12A. For more information, you can see credit for other dependents on this link. You will also find the same in the description below. Changes in credit threshold for 2018. Earlier, credit was available only for families who would fall under the lower and middle income slab, whereas now it completely depends on the filing status and threshold limits. So, here you have all the information about the child tax credit in this video. If you like this video, please like and also share it with your peers and family to let them know about child tax credit and its advantages. If you have any queries, write those down in the comments below. Please subscribe to H&R Block India and we will keep you updated on everything related to taxes.